Hello. What we've got here in our opening chart is economic history of China and other major powers going back to the year 1. So a 2,000-year-old a chart going back 2,000 years. It's not equally divided up, so you've got to be careful of looking where it is, because you've got year 1 down in the bottom left, and very soon you've got the year 1000. And then the next 1,000 years isn't even evenly divided up either, because next you've got the year 1500, and then you go 1600. So you've got to be careful how it's divided up. But it gives us a reasonable idea of the power shifts. Up at the top, because we're not going to mention them again, Greece, Egypt, Turkey, Iran, the Middle Eastern empires in year 1 were quite big hitters at the top in black and don't really ever come back into history. China was a big hitter in year 1, but not as big as India, which is in orange. Italy, down at the bottom left in blue, has a reasonable size there, about 6 or 7%, and that was obviously the Roman Empire, but nothing in comparison to India or China. And there we move to the compression of especially India and China, where by 1950 they were relatively or actually unimportant. Other countries had taken over, such as Russia in 1850, and Western Europe, basically, and the United States had already taken off. The zenith of the United States looks like it's just after the Second World War, and then everyone starts going down again, shrinking after the Second World War, except Japan, that expands and then contracts again now, and China opens up, and India is starting to open up again. Quite interesting the way we see the shift in world power of these regions of the world. Right, let's move on to the undoubted economic, financial, industrial and military power that there is still the United States. China is penciled in as an equal power by some people on some things, but really not realistically is any sort of an equivalent power on any mystic sort of criteria. So, the United States, central banks, this is a Bloomberg article, central banks, all central banks in the world, rebuilding foreign exchange reserves at the fastest pace since 2004. They see more trouble in the future and they want big reserves for doing stuff when the shit hits the fan. So, the central banks of the world are boosting their reserves at the fastest pace since 2004. They're crowding out investors seeking US dollars, boosting demand even as the Federal Reserve considers printing more currency, more dollars. After falling to an all-time low of 60.5 in the second quarter of last year, the dollar's share of global reserves rose 1.6% to 62.1% in December, the latest IMF figures show. The buying has left the private sector with $2 trillion less than it needs. The central banks have sucked up all the dollars and quite a lot of the dollar-denominated assets, and the private sector is short of them. According to investment flow data by Morgan Stanley, which sees the dollar gaining 8.2% in 2012, the most in 7 years, while the Fed has created more than $2 trillion under its stimulus program, the size of the Fed's balance sheet's up $2 trillion, and the money has gone out in what are called stimulus programs since 2008, the flows signal that there may actually be a shortage of dollars to meet demand as Europe's debt crisis deepens and the global economy slows. The dollar has risen 3.5% since the end of April against a basket of the most widely traded currencies, even amid speculation that the Fed, which meets this week, may undertake the type of stimulus measures that weakened it in the past, in other words, call it QE3 or QE2, depending what you call the twist program. Might as well call it QE3 twist. And so we're beyond QE4. And really, for the doves that they call them at the Fed, they're in the ascendancy at the moment because unemployment figures are still, they were coming down, but the last couple of months they've stalled, to say the least. CPI inflation has come right down. There's really not, and the Beige Book and other factors that the Fed looks at for industrial production are flat, blah. So there's really nothing much against the Fed printing, even if it's just to give everybody a bit of a boost and to get those dollars that are needed in the world out there. To stop this, which is number 3, this is the US dollar index, the USDX, and you can set back a year and you can see it started the year ago at 75 and it's up to that number 82 that I think is the number that the Fed will not really want it going above. A lot of people are predicting 85, but the prediction is 85 unless the Fed does something about it. 85 would be too strong for American exports. So that's another reason that the chances are that people will be very disappointed if the Fed doesn't come on with some sort of fancy QE. What they're going to buy, nobody knows at the moment. They'll probably keep it normal. There's no need to go into buying equities or munis yet. They can do that with the QE5 and QE6. Going over to Europe and RTE news from Ireland. Now, this is Troika considering extending terms of the Irish loans. The Troika is considering making big changes to the terms of Ireland's bailout as part of a concerted effort to organise the country's return to the markets, RTE News has learned. Now, I'm putting this in because I bet RTE have not learnt this at all. I very much doubt if Europe is thinking of stretching the Irish loans out. They're at about 15 years now, and they're saying that they could stretch them out to 30 years. I think it'll happen eventually, and I'm just putting this out as just part of the programme of basically lying, and lying might force Europe to eventually think about it and do it. I think they will in the end. They'll have to in the end. They'll have to do it for everybody. Stretch all the loans out. I mean, there'll be lots and lots of new loans to be put out, and then when they can't be repaid, they'll either have to be defaulted on or stretched, so they'll stretch them first, ease the loans out into the future, and when then they can't be met again, think of something else and eventually will be defaulted on. But there's loads of ways of keeping people from defaulting. Obviously, the favourite one is to lend them more money. And that's what a bailout is, basically. Somebody that can't pay their loans, you just lend them some more money. So I think eventually that will happen, but I doubt if it'll happen soon. Anyway, it might, who knows. And I'll leave you with this Spain chart. You can see it's an Edward Hugh chart by the colouring of it. Global Economic Perspectives. Spanish household consumption. From 1995 to 2008, you could see it was a 45-degree bottom left, top right, ramping up. Ole ole, having lots of fun. Let's say buying a Mercedes, for example. And since 2008, it has been downstroke flat. And of course, that is why the Spanish economy is downstroke flat. And eventually, when more countries go like this, the German economy will go downstroke flat as well. And have you heard what they're talking about in the G20 and shouting and yelling at each other? Oh dear, oh dear. That Barroso really should be... I don't like him. A rough type. That's it. Bye.